Hi guys, welcome to the Forex trading video for today. I'm looking to go short here on the US dollar yen, and we're on the daily chart right now. You could probably already sort of summarize the setup if you're a bit of an experienced price action trader, but this is probably going to be one of the last decent setups for the year. I'm not sure how fruitful the market's going to be. We're in November now. We are moving towards the end of year stuff. Generally, there is a bit of activity, the Christmas rally kind of stuff. So hopefully we can actually catch some good moves before then. So yeah, looking to go short. This is actually a pretty straightforward, very simple setup. We go to the weekly chart where I like to do my top-down analysis. Straight away, you should identify a ranging structure on the weekly chart. So we can see very clear, defined structure top and structure bottom. We can see the market just playing that tennis match between the two boundaries of the range there. And now here we are again. So we're testing the range top, and basically we're looking for signs of weakness here to determine if the market's going to go through another range cycle or not. So we go to the daily chart and we can actually see, yes, we do have, well, a few clues here. First, if we look to the left, we can see this bearish rejection candle here. We talked about this in the war room. It was a pretty underwhelming kind of candlestick pattern. It's there, but it doesn't have that oomph behind it. It doesn't really have, so much bearish authority in it. It's like, yeah, we got a little bit of a reaction off that weekly resistance, but not really the kind of thing you want to see coming off a weekly level. You expect a bit of power behind it. And it sort of did follow through a little bit, but trickled down, and then the market quickly recovered. But now we've got this second test here. So the market, again, for the second time, in the recent price action, has tested this weekly level, even tried to break through it. So we even got an attempt to break higher. And we've seen a much more clearer bearish reaction off that level. And the daily chart has left printed a large bearish rejection candle. If you compare the two, you can see this one has a much more defined range, much more clearly states the bearish rejection. I mean, the difference is pretty much in the range, but with a weekly level and a reversal signal, especially when you want to go against the recent trend, you do want to have a good reason to do so, and you really want to see that, okay, a directional change is likely to happen here, and a weak candlestick like that isn't really going to convince you enough. But when we get something a bit more powerful like this, then we can start thinking about putting our money on the line. So that really is the trade idea. That's it. I mean, we're looking at a weekly level. These are the major turning points of the market. Whenever the market reaches these weekly levels, we get pretty good follow through. So we can see the last 2 or 3 times really that the market tested here. We got 1, 2, 3. We got some really good explosive bearish price action off that, and that lasts for a few weeks. So if a sell-off does occur again, we can kind of at least expect some of that to repeat itself. We probably won't target the range bottom. I don't know. Generally with the ranges, once they go through about 3 cycles, then their shelf life starts to sort of disintegrate. If you have a look back through the history, you usually get about 3 tests, and that's usually the life of a typical range. So I probably, just going off that, wouldn't expect the market to move all the way back down to the range bottom. Sometimes what you'll see is, in this case, where you'll get a sell signal on a ranging market that's been around for a while, it might actually sell off. It'll give you a decent sell off, but then it'll pick up off higher lows or something and then come out for the break. So I probably will just go for that 1 to 4 target or something like that. So let's set up the trade. Okay, so I'm going to open my trade panel. All right, so this is my trade panel. Just a really handy tool to set up orders. Main thing that you would use this for is it helps you calculate your dollar risk that you want in any trade configuration. This panel can do a lot of different trade configurations, very advanced OCO kind of stuff and split orders and things like that. We only want it for a simple order here today, but it's the dollar risk that you really need to think about when you're entering a position, because a lot of traders out there, I see on forums, they just enter, they throw out lot sizes. Oh, I'll just enter 1 lot, 2 lots, or half a lot, this, that. They don't really understand their true risk. So when you set up a position, you want to think about it as, okay, how much money am I actually putting on the line here? How much money will I actually lose when I go to bed and I wake up in the morning and the trade went south? You don't want to just throw lot sizes out there or just go, oh, I'll just put a 50 pip stop on it or something like some arbitrary number that you've just sort of thrown out there. That's not really how you manage your risk. It's with dollars because, at the end of the day, that's what you're dealing with. So I'm going to risk $1,000 in this trade, and the panel is going to actually calculate the lot size for me for this trade configuration. So when I tell the panel what to do, like how to set the trade up, it'll say, okay, he wants to risk 1,000. Okay, we click buy or sell, and it will set it all up for me. So I want to get in the halfway point of this candle because we can see right now in the Asia session, and this is very typical, that the market will actually correct up the reversal candle range, and the halfway point is usually a good target zone for retracements. Sometimes they go a little bit higher, sometimes they're a little bit lower, but it's usually around the 49%, 50%. They usually go for about 49, just a little bit under that halfway mark. Um, that's usually a good sort of benchmark. And yeah, we want to place our stop loss above the swing high, so we'll go above the candle high. We can do volatility stop losses if we want to, which is based off the average trading range. So candle one, we count backwards in MT4 or any time series data. So the current active candle is always 0, and then we just count backwards. So the previous candle is number 1. So we want to put our stop above the high here, because if the market does actually rally all the way back up and break those highs, well, that is going to pretty much destroy our whole trade idea here. So we don't really want to be in the trade beyond that. We can actually preset our risk reward target here. So I might actually do 1 to 6. We'll see where that sets us up for. We can always adjust the target. Minimum, we want to get 1 to 3. That's why I set the default as 3 there. But going counter trend and just judging off I think if this setup does take off and starts really engaging to the downside, I think it will probably give up a decent reward figure before anything else happens. So that's pretty much it. So I just tell it how I want to enter, tell it where I want to stop, give it the other parameters. The dollar risk, very important. You can also do a count percentage if you want. And I'm going to hit sell. It should set me up with a pending order. All done. Okay, so we don't need that open anymore. I might, let's have a look. We've got to think about targets here. I think these swing lows are probably a sensible target, actually. 1 to 6, it's a little bit ambitious, I think. Just like what I said before, I don't think the range will actually probably live for that much longer. So we'll just go for a sell off down to these lows. That will give me 4.5 times. Okay, so target these support down here. So if it does sell off, we just won't really want to ride it down to here. And if the range is going to sort of structure start to change, you'll probably be around these lows anyway. The market will probably pick up around here and start to think about printing off higher lows or bouncing off higher lows there. And that's it. Ranges are really simple markets to trade. You just really want to, if you can target signals at the top and the bottom of the ranges and make sure they really stand out, they've got that authoritative nature. You can really clearly see that the market's showing you that it wants to reverse. So that's it. I'm going to just leave the trade there. Hopefully we'll get triggered, and I'll come back and let you guys in on how it all went. Hey guys, back here with a conclusion on this trade. As expected, the market did sell off. It took a week or so to do so, but that's swing trading for you. Actually, the trade basically lasted about 10 days there, so you're looking at about 2 weeks. That's 10 trading days, and pretty straightforward. I mean, we got the retracement entry that we were looking for, and the market actually just really started to grind down. There was a bit of slow movement around here, but after we took out these lows, it really dropped. I didn't actually hold it to the full target. I took it. I took profit at 1 to 4, so I was happy to take 4 times. The reason is it's Monday today, and the market it started to drop down a little bit. You can see it started to drop down a little bit. I mean, Monday trading and Monday price action is really difficult, and it's kind of unpredictable. It's a bit of a mess usually on Monday. It's very hard to trade it from a swing trading perspective. And we've also seen that the market has actually gapped away from the mean a little bit. So whether it's worth holding for that extra zero point 0.5 return, I don't think so, because I think what's going to happen this week is we're going to see a deeper correction. If we go to the weekly chart, usually what happens is you can see we've got a nice bearish week last week. Now, if the market is going to continue downwards, it'll probably first correct and then move down. But there is also the chance that it will just start to really pick up off here. So I'm really just not too fussed about that 0.5, and I'm just going to take the the 4 times reward, which is a really good outcome for a swing trade. Usually I aim for about the 3 times mark there, 3 times whatever you're risking, but 4 times is also brilliant. So we won't argue with that. And as I explained in the prior part of the video, I'm not sure how long this range is going to last. I really do think that the market is actually going to pick up off some higher lows somewhere around here and actually get moving, because the ranges after they've had those 3 tests, the shelf life really starts to degrade, and I think that most ranges don't usually last too much longer than three range cycles. After you go through 3 range cycles, in my experience, then they're really looking to actually break out. And if they do last more than 3 cycles, then they're kind of a rare occurrence, kind of a freak kind of range. And that's it. So this is range trading. Range trading is really, as I explained, best done from the tops and the bottoms. And top-down analysis, I mean, this was a weekly range play, so you have so much more power in the signal when you actually target these major structure levels of the weekly chart. That's why top-down analysis for me is so important in building in quality control in swing trading, because you look at the weekly chart, they're gathering very valuable information, and if you can synergize what's going on with the weekly chart and your trading time frame, which for me at the moment is mostly the daily chart, you can really stack in some power and some authority into those signals and get some really low risk trades. So in this case, it was pretty textbook. There's a big powerful sell signal sitting on the daily chart, and then on the weekly chart we just really have a situation where we really do expect the market to bounce off. So kind of expecting a bearish reversal on the weekly point of view. We've got the range and we've got the major level, and we've got the sell signal on the daily chart. I mean, not much to it, pretty much it. So trade complete, mission accomplished. If you want to know more about price action trading, you can check out the stuff I do on the site, theforexguy.com, or feel free to look at my other YouTube videos. And fingers crossed, I will have another video up soon for you guys to show you another trade I've got going. So I'll see you in the next video. Best of luck on the charts, guys.